Hello everybody, welcome back to the channel. I have an amazing video for you guys today. If you are in the market to buy a house or sell a house, or if you're in the rental market, you're not going to want to miss out on this awesome video. Now check this out. I found an article here from Fox Business News that you are going to want to pay attention. Now, if you want to read this article in its entirety, go down to the description. I will have a link to this article. Now check this out. It starts, certain California, Idaho, Florida housing markets most susceptible to downturn in a recession. Check that out. Why? Because houses in these areas have jumped so much, and it's places where people have high debt compared to income, and home equity are vulnerable, right? The more debt that the communities have, right, the more any downturn in the economy could cause them to have to sell their home, right? And what happens is that it floods the market with new inventory and it makes the price crash. Now we are going to kind of be jumping back and forth the Redfin weekly housing data, and we're going to look at this data and kind of jump back to this article and kind of talk about what's happening and what's happening on the ground. Now here, let's read a little bit. Housing markets, a surge in popularity during the coronavirus pandemic, saw a rapid rise in home prices, are the most susceptible to a housing downturn if a recession occurs. We've had 2 quarters of bad GDP growth, and to a lot of economists, they believe that 2 quarters are basically the sign that show that we're in a recession. Now the Biden administration came out and said, no, we're not in a recession because we still have record low unemployment, and one of the key factors of a recession is high unemployment. Now let me tell you, those new jobs that you're talking about, I don't believe those are very high paying jobs, and I don't believe those jobs are paying high enough to sustain such an expensive housing market, right? So you got to kind of read between the lines there, right? So as we keep reading the article, the housing market has already slowed down considerably this spring as rising mortgage rates has forced a lot of potential buyers out of the market, according to Redfin. Weekly survey mortgage rates by Freddie Mac shows 30-year rate at 5.3. Now remember, the banks just raised it. The Feds just raised it. So we're going to be seeing this probably above 6 in the next week. Now, with fears of the continued economic downturn, the brokerage analysis and metros that are the most susceptible to home price declines if the country enters a recession, and which ones are the most resilient. So reading a little bit, Redfin economist says that it is unlikely the country will see a housing market crash, okay? Like what happened during the Great Recession of 08, but the factors impacting the economy are different. For one, homeowners have a fair amount of home equity right now and not much debt. On top of that, unemployment is low. Perfect. This is a great sentence right here. Homeowners have a fair amount of home equity, right? So, a lot of people that were able to buy houses during the last economic crash, they were able to get their houses fairly cheap, right? And since the housing has gone up so much, that yeah, a lot of people do have equity. But remember, when people, this is not putting into account that during last year, a lot of people took money out. A lot of people took seconds out on their homes, right? Because of the record low interest rates. So if your house is worth $500,000 and you owe, $200,000, so you've paid $300,000, you have $300,000 worth of equity, you owe $200,000, and your house is worth $500,000. You can essentially pull money out, right? You can pull out an extra $100,000, but when you pull out that money for a second, you now owe another $100,000 on that existing property. Now, yeah, some people might be like, that's not a big deal because I make money and the interest rates are low. Sure. But what ends up happening is that people take that equity and they go and they might buy a jet ski, they might buy a boat, they might buy an RV. So at that moment, you have RV sales go through the roof, right? From all these people that have been taking money out of their home and buying, stuff like that, like boats and jet skis and whatever. And what ends up happening is the economy gets stimulated, right? Because they had record sales on jet skis and boats and whatever. And they end up hiring more people, cost goes up on things, we have inflation, whatever. And then But when the interest rates go up, well, guess what? Nobody's going to be refinancing their house anymore, right? Those are done, right? Because they already did it. Nobody's, people that are going to be taking money out of their house right now are people that are like, kind of like really need the cash. So what ends up happening is in the next 1, 2, 3, 4, 5 years, the sales of these boats and jet skis and RVs, well, they're gonna go way down, right? Because again, with interest rates being high, with people not, taking seconds out on their house, and people probably already bought the toys that they wanted, right? With that, when that happens, you're gonna see layoffs in these markets. And then what ends up happening is that those people now, if they get laid off, they might not be able to pay their mortgage, and they will most likely, want to sell their house. If that happens at a big level, which could happen, it's not going to happen like, oh wait, overnight, but it could happen, over the next 2-3 years, you will see housing go down, down, and down, right? If you jump into the Redfin housing data, okay, and if you look at median sale price right here, and I'm only gonna talk about 2019 and 2022 because 2020, was the, coronavirus, 2021 was record low interest rates. But if you look at this, okay, how much it jumped from 2019 to 2022. Look, the median house sale in 2019 was 278,000, okay? And then now it's 385,000. So what do you think? Now, I'm just throwing this out there. Do you think your community can? You think people in your community's jobs, their wages went up, that much? Okay. Like, do you think someone, for example, that was making, $80,000 a year in 2019 went up to, let's just say now their same job is paying them $140,000 a year? I don't think so. Okay, I think the person that was making $80,000 a year in 2019 is still making $80,000 a year in 2022. Maybe they got 3% raise here and there, but no, nothing like what we're seeing here in the price disparity. This is all because we had record low interest rates. Okay, and people with means, corporations, people with a lot of money, people with a lot of savings, they were able to capitalize and they went in and bought a lot of inventory. Remember, with inflation going up, one of the best things to do is invest in properties, right? Because as the value of money goes down, properties remain like pretty stable as a whole, right? Because you could hold on to a house for 20 years and trust me, no matter what the economy is looking like today, in 20 years, your house is going to go up in value. Absolutely, right? So you could see a lot of people that, maybe had their money in crypto, maybe had their money in stocks, maybe whatever, they had their money in different investments. They're thinking, oh my God, inflation's coming. Let me pull out of the stock market. Let me sell my crypto. Let me put that money into real estate because I know that real estate is going to hold its value. Plus you had record low interest rates. So people were even able to borrow, for basically dirt cheap. So the people that could went in and sold it. But the problem was that with record low inventories, because who wants to buy a house during I'm talking about the average person. Like, who wants to buy a house during 2020 when there was lockdowns, right? Nobody. So it was, and then people were scared. I mean, it was crazy. 2020, 2021 was crazy. So the movement, the need, the want to buy a house just wasn't there, right? So as a result, there was record low inventory, and the people that could afford it just shot the prices sky high. But it's unsustainable. So a lot of people are saying, oh, there's got to be a correction. Well, yeah, there's got to be a huge correction. Like, this black line needs to get down to like this blue line. Now, I don't know, what do you guys call that? A crash, a slowdown, whatever it is, that is a big drop, because from 278 to 385, that's huge, okay? So, I'm is it going to come down really fast, or is it going to come down over time? That is the biggest question. But, just seeing this going down like this, you could see that, year to year, things are changing. So we're going to have to monitor it. Now, I just really am looking forward to see where we are at in, end of 2022. Let's see where the chart, how the charts look. It's gonna be fun. It's gonna be fun being with you guys, talking about these, about the housing data, and talking about the economy in general. Now, if you guys do like these videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Remember, I am not a financial advisor. I do these videos for entertainment purposes only. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.